Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, March 15th, 4:33 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction. If you've been following us, you know that. Check over here in the upper right-hand part of the screen at the trend gauge, and you can see the red arrows representing market leadership. Short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average for the 5 major indexes that we review, all trending under their respective moving averages. Market leadership, nothing to write home about. Things have been concentrated in commodity type names, but they've pulled back in some cases quite a bit over the last couple of days. So always danger in crowding into the few things that are working. So what just happened today? Nice open, a little less than 1% across the board, but a gap and go. So we chopped around a little bit, took off to the upside, a little intraday correction, and then a nice close at the high of the day. However, volume was light. This is very similar to last Wednesday when we had very nice price action but light volume, and the market proceeded to give up any of the gains that it had since last Wednesday. But we, of course, don't judge exactly what's going to happen next. We've got the Fed on tap tomorrow, supposed to be a 25 basis point interest rate hike. Anything outside of that would probably throw a bit of a shock into the market because that's what everybody's expecting. So the G6, our in-house growth index, up 2.6% on the day. S&P up 2.1%. NASDAQ 100 led the way, up 3.1%. Dow up 1.8. Mid caps 1.4. Small caps 1.4. 60/40 global stock bond portfolio up 1.04%. Our in-house GROTECTION composite up 0.15%. We're still 85% in cash. Not taking too many deep steps into the market until we can see some sustained action and break some of the downtrends that we're in. And let's take a look at those downtrends. But first, let's take a look at the 5 fresh faces running Revere Asset Management. Trend following is what we do at Revere, meaning if the trend is going higher, we're participating. The trend is sideways, we're hedging our bets a little bit, not playing it heavy. And if the trend is down, which it has been since January 4th of this year, then we're getting the heck out of the way. So if you're interested in this approach, by all means, reach out to any of us. You can email Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or you can call 855-REAL-WEALTH. That's 855-732-5932. Let's get to the charts and let's get to the tail of the tape so we can break down exactly what's going on here. So several news items today, but let's start with the headwinds. Been in place for a while. Strong U.S. dollar, inflation. PPI came in today at 0.8%, slightly less than expected, but still at 10% annual rate. When your producing costs are up 10%, you got to pass those on to your customers, and that's why the CPI has also shown big inflation. The Fed is tapering their balance sheet. Interest rates are going up, and we've got the continued Russia-Ukraine headlines. From a sentiment standpoint, VIX actually closed right under 30 today. That was down 6%. Real-time editing here. Put call at 1.07. That's a little high, but not the spike that you need. Same thing with the VIX. You want to get to the upper 30s, maybe 40, to see a washout before you. That doesn't mean that we have to have it. That would give some conviction for washouts and maybe some capitulation, getting all the bears out, getting all the bulls out, and then a fresh uptrend can kick in. Fear and greed is at a 19, up from yesterday's 16. That represents extreme fear. So our bull case, what we need or what we needed was a rally in SPX getting back above its key moving averages. That failed on 3/7, defaulting back to our bear case, which is when the S&P 500 is back below the 200-day moving average. We're in bear mode unless we can spike a rally. So this is when the market is at the most risk. All bear markets start with a weekly close below the 200-day moving average. We've now been under there for 5 straight weeks. So that's why we have been playing things light and proceeding with caution. So the news today, I mentioned PPI. There's also an Omicron BA.2 variant that's running rampant in China and also rising in Europe. People are kind of over COVID as these latest variants are just really the equivalent of a bad cold, but not stopping China from locking down. And 2 key quotes today that came out of the Ukraine-Russian conflict. First, Zelensky said that our Ukraine has to recognize that we're not going to be joining NATO. That initially spiked the indexes a little bit. Then Putin followed up with a Ukraine is not serious about a solution. That sent the indexes lower, but that was shaken off. So what I was watching coming into today was, for a while I've been watching the S&P 500 and this overhead key resistance area at 42.90, but we're getting so far away from that that didn't make a point even putting a comment on here for several straight days. It had been, we haven't even challenged it. So first things first, can we get above the declining 8 exponential moving average? That had been resistance for about a week and a half. The S&P did manage to close above it today. The QQQ got above it intraday, closed just below it. So at least the first short-term moving average that we want to get across, the ADMA, let's look for multiple closes above that and for it to stop going down and to turn positive. So what I'll be watching tomorrow is, can we get an additional close above the ADMA? And with today's close at 42.62, that 42.90, less than 1% away, we'll be keeping an eye on that also. So we had that gap up, then a chop. Trended up to the ADMA intraday. Here's the S&P 500. Let's take a look at it. So here's your open chop. We trended up this first attempt to the ADMA. We got just barely above it and then failed. This little move above here was when the Zelensky quote came out. This move back below here was when the Putin quote came out. Then we rallied again, couldn't get above those intraday highs, and then we started trending lower for most of the afternoon until I guess the buy algos turned on. We turned tail at 42.18, which was the prior low of the day, above the 42.14 opening 30-minute range. I write this down every day. Very often it serves as support or resistance on intraday moves, and then a strong move into the close. You can see increased buying coming in here, but volume was still below average on both the NASDAQ and the S&P 500. So decent close. So there's our intraday move. Let's go back to the daily and let's examine what we're dealing with here. This purple line is the 8 EMA, and since 3.4 was what our first close below that, and you can see every attempt that we had to try to get above it has been thwarted. Before we can even challenge the 21 EMA, which we consider quite a bit more important than the 8 EMA, we first have to get through the 8 and turn that up. So just 1.1% below the 21 EMA here. So we got to see what happens after the Fed announcement, which typically is volatile, usually with a fake out in one direction. And then we got to see what follows up on Thursday. Last time the Fed minutes were released, we had a fake out to the upside before giving it all back slightly after that. So you don't want to jump to any conclusions on what the market does immediately after that. It's the Thursday and Friday reaction that are really the key. So I imagine we'll play it close to the vest here at Revere, as we don't gamble with our clients' money. So back to the tail of the tape. 10 out of the 11 spider sectors were positive today. The only thing that was down, the only one of the 11 that was down was energy and gold and silver, 2 things that had been acting well lately. They've taken a break from there and some money flowing back into the other 10 sectors, with the big recent pullback in oil. Jets, the airline ETF, had a good day. Semiconductors did, builders did, retail did. We didn't make any in-house trades today, so our exposure is a 0.29, adjusted exposure 0.29. We've got 85% cash. So to bottom line, what's going on today? We're waiting on the Fed tomorrow. Today we had nice gains with 10 of the 11 sectors up, but volume was light. So key levels that we want to look at here. Here's where we closed, 42.62, this big one overhead, 42.90. We got to get through there before we can get to the declining 21 EMA. I believe that this is actually closer to 4,300 now. I'm not sure that I updated that. Yep, that is at 43.12. So that'd be the next area to challenge should we get above 42.90. And in fact, we were above that earlier this week with a big overnight gap up that failed. All strength has been sold, and until really that stops in the market, the market's not going to be able to make any progress. You can see here very clearly, this is a downtrend, starting with 48.18, the top in early January, and just continuing to make lower highs, lower lows. You can see we've got support here at the area where we closed at the last 2 days, that being around the 41.87 area. But overhead, this 42.90, which corresponds with this area back in September, which corresponds with a breakout over here last June and July. That's the key area that we need to get above. And that's the 21-day moving average is closing in on that very quickly. If we get above that, we'll be killing two birds with one stone, maybe get some momentum going, some money flowing into some decent stocks, and be able to participate in the next uptrend. Let's go to the NASDAQ 100, very similar story here. Paused at the uptrending 8 EMA today. You can see the other moving averages. The 200 is basically flat, and the 50 and the 21 are overhead. Dow Jones Industrial Average almost up to the 20, actually did get to and touch the 21 today. So this is what we want to see on the NASDAQ and the S&P, where you get above the 8 flattens out, starts to curl up, and then you challenge the next higher level. So the Dow leading the way for now. Mid caps, not so good, right around the 8 EMA, actually 0.2% above it. Still got the overhead 2150 and 200, and finally small caps, very similar situation. The overhead 2150 and 200, still below the declining 8 EMA there. So how about some individual names? Let's take off this stochastic indicator here. Leading the way today, and this is something to definitely keep an eye on, a stock called GFS. Semiconductors, we know that there's a semiconductor shortage worldwide. This showed some nice price and volume action today as it's coming up near the top of its IPO base that it's forming. IPO is more volatile than usual, of course, but this does have enough volume for us to be interested, and it's also in the 21 over 21 list. So definitely something that we're paying attention to. What we own still in-house, 4 holdings. Costco, this is our largest with a full position, that's 6%. Forming a cup and handle. You can see the cup and handle recognized now on pattern recognition with inside of MarketSmith. So breakouts, as you know, have been failing. So that would be a change in character. But note, this is what we're looking for, is these stocks that have been showing relative strength lately. These are the things that have been holding up here. Doesn't necessarily mean that it's going to lead if the market starts to rally, especially because a lot of things have been more defensive sectors, and value typically doesn't lead a market rally. You need some growth cooperation to do that, very similar to that GFS stock that I just showed. Also something like Bros, a nice growth story. Struggling around this 50 area with its moving averages all stacked up here. I'd like to see a nice big volume move off of that 50 area for us to get interested in it. Let's show the last 3 things that we still own in-house. Nucor, one of the leading steel stocks, came back, bounced off the 21. Nice strong close after a shaky start today. Raytheon really not able to get anything going here. Lockheed Martin is really the leader in the group. This is what happens when you buy something at a lower risk entry but it's a little bit of a laggard. You're limiting your downside, but you're also limiting your upside. But when you're defensive in the market, that's a trade-off that sometimes I have to take. Let's compare that with Lockheed Martin. You can see how much further it is breaking out of its base structure, now consolidating over the last 4 days. We get a good entry in here. I would trade out RTX for LMT. And then finally, Halliburton, all oils pulling back. You can see this pull back the last 3 days, but it did bounce off the 21, just like we want to see. Let's take a look at USO here. This is oil. You can see this big gap up peak at that 130-day. On the equivalent of the crude futures, but very harsh pullback now over the last 5 days, giving back most of this breakout area. So crude pulling back from 87 to 68, quite a percentage pullback, and you're seeing something similar there in the oil ETF. There's 3 main ones. XOP, you can see it undercut but reclaimed its 21 by the end of the day, but by at the lows today, again, gave back most of its breakout above this 115 area. OIH is the service sector, big breakout, but again, bounced off the 21. That's good, but gave back most of its breakout from this flat base. XLE is the other big one. This one's dominated by Chevron and Exxon. Actually broke below the 21, pulled all the way back to the 70 area where it broke out. And another one that I'm watching, a fourth, it's not as popular, but this is more natural gas related. It's a natural gas index, FCG, undercut but closed right on the 21, but again, gave back all of its gains. So everybody, we heard from a lot of people saying, buy oil, buy oil, buy oil. And, if you get it, you don't get it early and you get in at the top, that's chasing. FOMO, fear of missing out, and then you get slapped. Hunter talked about this yesterday in his video. The strongest things, you can wake up to a big gap down when you've got a bear market going on. So that's going to wrap it. As always, I'd love to hear feedback. You can email me, don@revereasset.com, or phone 855 Real Wealth. Wrapping up Tuesday, 3:15. This is Don Vandenbord with Just the Facts. Thanks for listening. Have a great day. Tim will have tomorrow's video, and I'm sure he'll have a lot of comments on what the Fed says tomorrow afternoon at 2 p.m. Eastern. Take care, everybody.